Welcome back, everybody. The day has finally arrived again for Bitcoin after an initial fake out caused by that hack on the SEC X account. The first ever spot Bitcoin ETFs received the green light. They're up and running. Those funds saw big swings on their first day of trading, mirroring a volatile day for crypto prices more broadly. Vanguard telling us Bitcoin ETFs will not be available for purchase on the Vanguard platform, and they have no plans to offer funds of their own. Merrill Lynch also reportedly taking a similar stance. 11 funds, however, starting to trade today, with the two biggest being the Grayscale Bitcoin ETF and the Invesco Galaxy Bitcoin ETF. Grayscale CEO Michael Sonnenschein weighed in on the historic event earlier today.
Investors should have choice, but GBTC is coming to market in a very differentiated way. It is going to be, as of this morning, the second largest spot commodity ETF in the world. It has $28 billion of assets under management, and other issuers may try and differentiate on fees. For GBTC, it's about size, liquidity, and track record.
All right, here to discuss the market impact and explain how this all works is our own Bob Pisani and Kate Rooney. Kate, let me begin with you. How did these funds get up and running so quickly post-SEC approval, and how did they instantly accumulate, what did that guy just say, $30 billion in assets?
So that's a particular example, Tyler, with Grayscale, because they already ran this publicly traded Grayscale Bitcoin Trust. They've had that for years. They had about $28 billion in assets. They did what's known as an uplist. So they converted that Bitcoin Trust into an ETF. So that's how they were able to gain the momentum. Others are trying to catch up, but they did some seed investing, basically, where they got money from private investors before they launched this. So they were able to accumulate billions of dollars ahead of these launches. BlackRock is a good example, where they were able to raise money ahead of this. But a lot of the back end infrastructure, kind of boring stuff that we don't normally talk about if it weren't a Bitcoin ETF, happened, over months and months. Like the authorized participants, sort of the Wall Street players, they have been preparing for this, knowing that this was one of the worst kept secrets on Wall Street, as someone described it to me the other day. They knew this was happening. They knew they were going to get approval. So they've been ready for this, and they were ready to launch today.
Bob, how easy will it be, is it, to invest in one of these things? And obviously, you don't have, they're priced in such a way that you do not have to spend, for example, $40,000 or $50,000 to buy a Bitcoin.
Yeah, this is the beauty of the way it's set up now, and why a lot of people were in favor of Bitcoin ETFs. This is a safer, cleaner way to own it. It transformed gold 20 years ago. You and I were around, Tyler, for the gold ETF in 2004. A lot of people used to own gold and gold bars and gold coins in their basement, and all of a sudden you didn't have to do that. There was a custodian to hold it for you, and that's what's going on with the Bitcoin ETF. There's now a custodian. Coinbase is the custodian for a lot of this, that holds it, and they're the ones that are responsible. If you don't forget your passport, you don't lose it, they hold it for you. So that's the key here. I would just say the big question for today, for all of us who watch this, was there a lot of interest? And there actually is. There is considerable numbers here. I see almost $4 billion in trading that's been going on here. And there's some winners already. Grayscale, as Kate mentioned, is obviously the big one because they're converting an existing fund there, $27 billion. But look at iShares. That's a brand new fund there. They've got some significant volume there. Fidelity's also got significant volume. ARC's doing pretty good overall. I'd say there's going to be some very clear winners here, and you're going to be differentiated based on how much liquidity there is, what's the ease of trading, and what the fees are. And you see some of these fees are. The initial fees here for several of them are zero. They'll change in 6 months. They'll get fees 0.2, 0.21%. iShares is at 0.12 for the first 12 months. That'll go up. And Grayscale Bitcoin Trust, that's at 1.5%. You see the problem there. That's a little bit of an outlier. But as Kate has been pointing out, they can be an outlier. They've got a lot of money. It's very sticky, and there's some tax implications of coming out. So if I had to rate this in terms of interest, I'd say interest is very high on the initial day.
Bob, that's exactly what I was going to ask, is about these fees, because it's ultimately a commoditized product, isn't it? Why shouldn't the fees be in a race to zero, which will undermine the profitability long run. Why and what are the tax implications that could argue for 1.5% on Grayscale versus a couple basis points for everybody else?
Well, if you and Kate's done some great work on this. If you sell out with the amount of money you've made over the years, if you hold on to Grayscale, it's going to have significant implications, tax implications. But you're right. There's a race to the bottom, just like there was with any of the stock ETFs that trade out there. And this has happened literally in the last 5 days. On Friday night, I wrote a story about some people who had already said this is what our fees are going to be. Monday morning, that was changed. They were changing around. Other people announced new fees. Then Tuesday, they changed it again because they all looked at each other and said, oh, my gosh, we're going to lose if we don't cut the numbers. And literally Tuesday, Wednesday, they were changing the numbers overnight. I'd come in and the number I had before was wrong on the day before. So think of how much the investor is going to benefit from this. The beauty of it when you have a lot of people involved in it.
And Kate, that also raises the question about Coinbase. The CEO obviously was excited about this earlier on our air. He said they're going to be a custodian, they're going to be involved. But Dan Dolev, who's been a longtime bear, says, they're going to lose money because they're charging 2.5% on trading right now. And these ETFs, of course, are going to, they're not going to be on their platform, and they're not going to be trading as much. And perhaps maybe they will go the Robinhood route and start letting ETFs trade on their platform. But it does have big implications for their business model. And the stock's down more than 6% today.
That's been one of the big arguments around Coinbase is that why would you, if you're a new investor in Bitcoin, for example, why would you want to go to Coinbase versus buying this alongside any other equity in your Fidelity account or Vanguard? Actually, Vanguard, we should mention, is not allowing this Bitcoin ETF to trade. But the ease at which you could do this in a Robinhood or Fidelity is a threat to Coinbase. We talked about fees. Coinbase still charges about 300 basis points or 3% on a lot of the retail Bitcoin trading. So talk about pressure on fees. This could be a forcing mechanism for them to need to lower fees like we've seen play out in the brokerage world as well. But guys, I also want to make one point. I thought this was the best way to think about this. And I think, Kelly, you'll like this reference, especially pickleball. So you think about Bitcoin. Bitcoin and this ETF is like pickleball getting added to the Olympics. So it's got a lot of momentum. People like to play pickleball. It's kind of this divisive thing. You've got these country clubs saying, hey, it's too loud. We don't want to add it. But pickleball is here to stay, and this Bitcoin ETF is here to stay. I just thought that was such an interesting way to think about the relevance of this whole thing. You think about it like pickleball. It's popular. And now, in this case, it's here to stay.
Wow.
It has not been added to the Olympics, but
it's a good framework. Did I miss something? Is it in the Olympics?
Pickleball in the Olympics. Hey, one real quick thing. People are asking me about why don't they track Bitcoin right now? Because the prices are all over. These are new products except for Grayscale. And so there was a reference price that the company started, just like an IPO. They pick a price, they're going to do it. And don't worry about it. In the next few days, these products should track Bitcoin. If they don't, there's going to be a problem. And so just don't use the prices today. The reference prices don't mean that much of what we're doing today. Let's start tracking that as of tomorrow.
That's interesting. We are out of time, but there is so much. I don't know how we liken this to the pickleball analogy, but Hester's dissent, the questions that we had, 5 years ago when they denied these ETFs about, where the pricing is coming from, some of the platforms that they're citing and all the rest of it. The story will go on, but we'll leave it there for now. Thank you both very much. We appreciate it. Bob Pisani and Kate Rooney.